Well, hello, welcome to another trading day right here in Lagos, Nigeria. But this time, it's the day where we get that decision, how much it will cost you to borrow money in the country. Here's what's coming up. As I said, it's decision day. Nigeria's the Monetary Policy Committee meets for the 300th time this month, and major focus will be inflation. And yes, that is the focus today, decision day right here. But let me give you a quick recap of what happened at the last meeting when they met in February. See, the committee decided to retain all parameters, and we see the monetary policy rate, that was at 27.5%, asymmetric corridor plus 500, negative 100, CRR there, that was maintained at 50% for merchant banks, and that's for depositor banks and merchant banks. That was at 16%. But what's going to happen today, we're definitely going to find out, and we'll be covering all of that right here live on the show. Meanwhile, members of the organized private sector have called for a stable or reduced interest rate instead of a further hike as the Central Bank of Nigeria decides. Today, you see the OPS is advocating for a reduction of the MPR to prevent slowed business growth while criticizing the existing rate, stating that the economy cannot run on a 27.5% interest rate. Says nobody can borrow money at the current rate and make a profit, from any business. So that's what the organized private sector is saying there. But let's get a check on what's happening with oil now. We see oil prices edged higher today, but the potential breakdown in talks between U.S. and Iran over Tehran's nuclear program and the weakened prospects of more Iranian oil supplies entering the global market. But we'll see it, this mild decline there for Brent, $65.49 a barrel, down by 8 basis points. And we see WTI, $62.54 a barrel, still managing to stay above that $60 psychological mark. Let's see also from the private sector here, that's talking about oil now. We see the Dangote refinery, they've pledged for a stable ex-depot price of fuel to ensure a stable pump price at the filling stations, despite fluctuations that we're seeing in the global crude market. It's citing the inconsistency with prices, but the Dangote refinery, the management there is pledging that despite what we're seeing happen in the global oil space, they will try to maintain ex-depot prices so that we can afford fuel when we go to the pumps. To the metals market now, see gold prices ease as a slightly firmer dollar and optimism over a potential ceasefire between Russia and Ukraine. That dampened investor demand for the safe haven assets. Investors there, but we're seeing a marginal gain for spot gold, $3,235. U.S. gold futures, that's holding up 0.20%. Let's see other metals in the region there. We've also been checking out the dollar, how the dollar is doing right there. Spot silver, 0.22% up, $32.58 per ounce. Platinum, a bigger 0.76% jump there. But palladium, that's down there, 0.03%. So metals market not looking so bad. We're still seeing just a little reduced demand there for the safe haven play. All right, so we're going to be checking what's playing out in Europe. Definitely, we'll have a check there. What's happening, definitely the markets in Europe. Last Holters with DW and joins me from Berlin. Great to have you, Lars. So what are investors looking at? All right, we'll try and get Lars at some point now. But talking about credits on the African continent, we've seen proponents, talk about how we can actually get competitive interest rates right here on the African continent. We don't have to, rely, very much on getting higher interest rates. And with the currency devaluations and a stronger U.S. dollar, that definitely impacts how much it costs you to get credit abroad. And we see in John McWhirter, they have had a chat at some point last week about what to expect with interest rates in Africa and most other countries. Do take a listen.
When it comes to the bond market, it really ranges, right? The key stakeholders, and it goes from institutional investors, the government as well. At the end of the day, when we talk about the domestic bond market, what we're talking about is entities being able to raise funds from folks who are resident within that country, entities, corporations, pension funds within that country. And what it means is really you're raising a bond, and it could be government raising the bond, it could be an entity. I think some of the Nigerian entities, Dangote as an example, would raise some bonds domestically, they will raise some in cross-border markets. And the goal is really to fund projects within the country. So all stakeholders are involved, right? If it's government raising a bond, they can sell to institutional investors who hold these bonds with the promise of a coupon rate that they get on it. Pension funds will probably tap into that as well to turn over the pension of people. So everyone benefits, right? The purpose for which the fund is raised, we don't advise on that. We don't make recommendations on that, because at the end of the day, the investors will look at those projects, look at the feasibility of the project. They will take the credit rating as one of the factors that they consider.
All right, so definitely it's decision day here, but we've seen decisions from some other African countries and expectations for inflation in those countries, and we have Willibong to bring us those details. At this point, great to have you. Will, and it's all about borrowing costs and inflation.
Really borrowing costs. Countries are looking to cut borrowing costs, but they can't help it because you see African countries neck in debt, in debt, and you see some of them still having high interest rates because of the high interest rates. So they have no choice but to pay higher, borrowing, interest when they're, paying off their debts.
Right.
So, but when you look at U.S. right now, it's quite surprising that we see Moody's downgrading them just because of the borrowing costs. And we see the UK also suffering from, high borrowing costs. So it's like countries are looking to manage their budget, manage their finances, and it's a bit difficult this period, especially with the geopolitical tensions. Everyone is scrambling one way or the other to see how they can, and that's why you see this protectionism, coming in, like, oh no, we need to, protect our own, do our own, U.S. first, or maybe Nigeria first, everything first. But we cannot, like you say, we can't do first right now because we need to still look outside and, relate to our neighbors, especially in terms of trade and other things.
I'm sure, consumers at this point would want some kind of consumer first.
Yeah, I actually particularly need a consumer first because when I go out there to buy something, it's more like the buyer thinks is the seller first before the consumer, and then you're haggling for prices to get the middle ground. Where will the compromise come from? Is it going to be more from the seller side or from the buyer side? The consumers always want to be considered as king. So Africa, we see the continent, but right now, inflation seems to be easing on the continent as predicted by analysts or economists. So we're going to see, hopefully by the second half of the year, we'll see it taper down further, and maybe we'll see interest rates also maybe, not being hiked, being cut.
Everyone
but right now, even the U.S. Fed is just saying they only see one rate cut in 2025.
Just one tiny
rate cut in 2025. That's not a great one for other countries, especially those in the emerging economies. The emerging economies, because they depend on the dollar, and so if the interest rate is not, if the interest rate is not, cut down, we're going to have higher interest rates to pay in terms of our debt. So Africa still bears the brunt of anything happening.
Yeah, everyone's feeling that at this point.
So let's just see where other markets, other economies are. We see Ghana. When we looked at Ghana's inflation, it slowed down in April this year from 22.4% to 21.2% in April. And this was driven by easing food and non-food prices. And despite this progress made, inflation remains above the 6 to 10% target that the central bank has set. And the Bank of Ghana raised its benchmark rate to 28% in March. And this is aiming to tame inflationary pressures and stabilize the economy as the country continues implementing reforms under its IMF-supported recovery plan. Now, Kenya's inflation rose slightly to 4.1%. If we look at Kenya's economy, in April 2025, it rose to 4.1% from about 5% we saw in March, remaining within the central bank's 2.5 to 7.5% target range. Now, to boost the growth, the Central Bank of Kenya cut its policy rate to 10% in April. And that's the 5th consecutive cut, and that signals a more accommodative stance as inflation remains relatively stable. I'm saying relatively amid improving economic conditions, because we see countries are still grappling with stringent, very tight economic conditions on the continent. Now, Angola, if we look at Angola's inflation, it stood at 22.32% in April. Look at Angola on the screen very quickly. In April 2022, we saw that 22.32%, continuing its gradual decline. The central bank last held the policy rate at 19.5% in March. So standing at 19.5% and interest rate at 22.32%. And this has been held since June last year. The central bank has been holding 19.5% since June 2024. Angola, if we want to know, recently secured a $1 billion loan from JP Morgan below 9%. Now, we're talking about borrowing costs and paying back debt. This is one of the things we're talking about. The government also covered a $200 million margin call in April, and that's underscoring its commitment to maintaining fiscal and monetary stability. So borrowing and paying back debt, they've got to find a balance. Now, looking at South Africa, you see South Africa dropped to about 2.7% in March. Look at that very quickly on the screen. And that's its lowest in nearly 5 years. And this was boosted, it was helped by falling fuel prices, because South Africa has been battling high fuel costs, hikes in fuel costs. But right now we're seeing lower fuel costs and then lower tuition increases. Now, despite all this, the South African Reserve Bank is expected to keep its interest rate at 7.5% in May. And that's after, cutting it from 8%, balancing economic support with the need to guard against external risk and currency volatility. Now we'll zoom down to Nigeria, home country, where the MPC decision is expected to be out today. We're waiting for the central bank governor to make his announcement. We saw inflation in April tapering. It eased to about 23.7% in April this year from 24.23% in March. And then this followed the rebasing of the CPI. Now, high food prices, however, still remain a concern. If you go to the market, you find that food prices are still very high. The Central Bank of Nigeria is keeping, at the last meeting, kept the interest rate steady at 27.5%, perhaps to watch and monitor and see how these monetary instruments are going to impact the broader economy. Now, after aggressive hikes totaling about 875 basis points in 2024. That was the total the central bank implemented to control inflation, and this is also to stabilize the naira amid persistent economic pressures. So we're going to be waiting to see what the Central Bank of Nigeria is going to do, saying that inflation is tapering down. Economists expect interest rates to be held steady. That will be for the second consecutive time, but we'll wait to see. Central Bank Governor, all this, the MPC might have some other thoughts, up their sleeve or some other announcement to make. But most Nigerians are expecting a hold or a cut in rates. But is it too early to cut rates? Are we really feeling the impact of lower inflation on the paper and the market on the streets? Are Nigerians feeling the bite or feeling the impact of lower inflation and the hold the central bank has kept? Maybe, maybe not. Ladi, the point is, it's not just about lowering this rate. It's about, do Nigerians feel this? Are they enjoying, the purchasing power of Nigerians? Right. Is it Is it lowering?
Because even though,
going up? Is it going down?
even though we did see a slowdown in April,
yes,
23.71% is huge.
It's huge. I didn't see a slow in the market.
You cannot feel that.
I didn't see a slow in the market.
No, you can't feel that.
I didn't feel it in the market.
You can't feel that. But you know, we do definitely hope that all the forces somehow, you know, align, because
that's the most important thing. You know, monetary, fiscal policies coming together to actually ensure that the what we see out there is what the policies are working. They're effective. Because if there's no alignment, there's no correlation, we will definitely not see this impact in the market, and we'll continue in this state. Maybe they will just probably keep holding, like, you know, Emefiele in his time held for like how many months consecutive, like for how many meetings he held, but did we really feel the impact of that hold?
Right, as long as, you know, the interest rates...
on the dollar, on exchange rates and the rest of it.
As long as the interest rates stay high, you know, definitely that increases cost of borrowing for businesses and definitely puts them in a tight corner, not allowing them to, you know, expand, you know, the business. And you've seen cases where some businesses have to look to other sources, you know, to get credit, somewhat affordable, you know, credit.
Is it really affordable?
Is it really? You know, sometimes it's just maybe a little difference, but still, you know, elevated. And, you know, we did see a couple of businesses issue, you know, commercial papers, you know, trying to raise
at what interest rates?
And definitely
it was really high.
Some of them were wiped out because you could get better yields, you know, with you know, government securities. But, you know, so much to unpack there, and definitely we're hoping for the best, you know, this time.
Hoping for the best.
We'll see what the central bank MPC have up their sleeves.
Definitely.
This
time.
Thank you so much, Will, for giving us the details there. What's happening at other countries on the continent when it comes to inflation trends and that's interest rates. All right, we'll take a break now. When we come back, we'll start the conversations right here on Business Corporate. To stay with us. All right, so yeah, it's a decision day right here in Lagos, Nigeria. We're going to get what's the borrowing cost is going to be going forward. We've analyzed, you know, the previous decision, you know, so far, but consensus for this one is we're expecting a hold this time. That's according to economists and experts on the matter. And very soon you'll get visuals of what's playing out right there in Abuja. That's at the Central Bank of Nigeria. Would definitely we'll get shots of what's playing out there. But there's a lot to unpack, you know, today. We need to find out what's before this MPC right now, and you know, what to expect, you know, going forward. And you see the room there is ready, and very soon those chairs will be filled up, and we'll get the decision that's from this MPC, and consensus at this point is a hold. But are we going to get a surprise, something, maybe some kind of change, you know, somewhere? We'll definitely find out. But that room will be filled up in a few minutes, not too long. But to help us unpack everything that we have today, we have Mr. Paul Alaje. He's the chief economist at SPM Professionals. We also have Mr. Hakeem Mohammed, executive director of global markets and institutional banking at FSDH Merchant Bank. And they're both joining us right here in the studio. It's great to have you both.
Thank you.
Thank you.
I guess it's happy decision day. It's that time again, you know, where we get to, you know, talk about the issues and, you know, what's before the MPC, you know, at this time with their decision on what it's going to cost us to borrow money, you know, at this point. But, you know, seeing what's playing out, you know, in the global scene now, we're seeing the likes of the Bank of England. We're seeing the European Central Bank, the ECB, also, you know, cutting interest rates. It's a different picture when you go to the U.S. We've seen the pressure Donald Trump has put on, you know, the Fed chair, that he must cut rates, that everything is looking good, in the economy. He should start cutting now, but they're still maintaining their whole stance. Let me start with you, Mr. Paul Olaje now. So, seeing what's playing out on the global scene and what we have here in Nigeria, it seems there's a real conundrum there for the central bankers, but other central bankers seem to be cutting. What do you see?
Well, our reality here is very different, as you've rightly mentioned. For Nigeria, you still look at our inflation rates. What is the essence of determining? One of the things we intend to achieve is perhaps to manage inflation. And number two, to ensure whether we want our economy to expand, or we want it to contract, or we want to keep watching it, whether there will be any externalities that could affect or that will have implication on the economy. So because of what we are going through, right now, inflation has been rebased, if you like. We have seen 24% when it was done. It went to 23%. It went back to 24%. Now, asking whether inflation has increased or dropped, it will be very difficult to respond to, because the National Bureau of Statistics gave us a different base year for 2024. Now we have a different base year in 2025. You cannot compare apple with banana. Anybody saying inflation is increasing or reducing is actually not saying complete truth. And if you think that the person is an economist, then you should doubt his knowledge of econometrics, whether the person have a full knowledge of what it means to compare numbers, previous year, base year, to this year. So what should be done for central bank to actually make informed decision, and perhaps that's one of the reasons why they may likely hold, is National Bureau of Statistics should have converted 2024 inflation rate with the reality of today, so that our comparison will be apt and we can make informed decision. So what we are seeing at best is to compare month on month, because you cannot compare 34% to 32%. In econometrics, at best we post all of these, what is happening now, as outliers, until we get to another year when we can now compare the similar base year. That's when we can compare apple with apple. If we say we want to increase, for instance, it will mean that government is thinking the economy it has expanded enough. We are hoping we could have a contraction, and we also want to control inflation. The question is which inflation? Because we have 24%, we want it to go to 23%. What is driving inflation is another kettle of fish, which I hope that we will get to it. Because all the time that we have increased, remember that it was 14% for a longest period of time. And when we increase it to 14 and it surpassed 20%, what happens? Do we really see inflation reduce? Why? Because what drove inflation? Out of 5 key things that would have driven inflation, that is driving inflation in Nigeria, 2 major parameters from our numbers, from our research, review that those are the things we should change. So what are those 2 things, if time permits me? One is exchange rate. The second one is price of energy. And when I say price of energy, 2 things, price of fuel and price of electricity. So when you increase electricity, even by 10%, you are going to see direct implication on inflation. If you increase price of, what's it called now? Price of electricity, not electricity now, fuel, by 10%, you feel the direct impact not beyond 3 months on your economy. So what we should look at, if truly we want to combat inflation, and someone asked me can we still achieve President Tinubu's target of 15% on inflation? The answer now is yes, provided we can do something about exchange rates and the price of it. If you do that, that will radiate through everybody's economic activity. Right. Banks will feel it, manufacturers will feel it, because if diesel goes to, from our numbers, around 700 per liter for both PMS and diesel, it will have impact on virtually everything. And exchange rate, if it comes down to about 1,100, then everybody, then President Tinubu's goal to achieve will be felt. At that time, when MPC is saying, let us increase rate, then it makes sense, so that there will be direct impact of policy on the economy. But where they shouldn't go at all is to reduce rates. Because if you reduce rates on the immediate, unlike what you see happening in the Europe and UK, once you reduce rate, what you are saying is that let's see what will happen to inflation. Only one direction. At that time, we cannot decide. The inflation will go up.
There are lots to unpack there, definitely. And, going by what we're seeing, in the global scene, they're cutting. And, that's looking at the ECB and the Bank of England. So, coming to you now, Mr. Hakeem, do you think they're cutting too soon, at this point? Do you think, the dynamics might change, at some point?
I think so, especially given what has happened, maybe the last
month or so with the tariff increase and all of what President Trump has done, since he came into office. If you check, the U.S. foreign policy, has changed with Trump coming into office. So Trump runs on, he wants to cut energy prices in the U.S., right? And what that then means for a country like Nigeria is that we then start to struggle on the fiscal revenue side, because the fiscal authorities will be interested in looking at, where things are, and they'll be interested in, so for example, we have a budget that we've cut for ourselves. We said, oil prices benchmark was 75. We're going to produce 2.1 million to 1 million barrels. We're struggling with 1.4 million barrels per day as we speak. So what does that mean? It then means that, we can't afford to cut at this point in time, because on one hand, the central bank has their eyes fixed on managing inflation, like you said, and one key parameter they also then look at is exchange rate. Over the last, maybe just short of 2 years, since the president made that famous announcement, taking out fuel subsidy.
Subsidy is gone.
Yeah, subsidy is gone, right? And also all of what central bank has done also around trying to float the currency, you can call it managed floats, right? We've seen a lot of liquidity flow into the Nigerian markets from portfolio investors and all. And the government has done quite a lot in trying to also attract foreign direct investments and all. But to the extent that, there's still a lot of work that's been done on trying to generate more foreign exchange from non-oil exports, right? But to the extent that oil is still the major thing that we're focused on now, anything that affects oil prices would affect, direction of the economy. So from a central bank perspective, so I believe that the MPC members in that room today, one of the things they're going to be looking at is to say, okay, if we cut now, what happens to a lot of these gains that we've made over the last, let's just call it 2 years. I know it's not quite up to 2 years. And they'll be thinking, if we cut now, are we going to trigger exits, at least from the portfolio investors who, over the last 2 years or so, have brought in maybe some liquidity that have stabilized the system. If you cut now, will some of them start to say, you know what, Nigeria is not that attractive, let's go to Egypt, let's go to some other countries. And I think they would then be saying to themselves, maybe perhaps it's too early. Let's sort of try and digest what has happened. We've seen, it's been like a full circle from increasing tariffs, raising tariffs on China to, unprecedented levels, to coming back to say, okay, let's pause, we're negotiating. And you can see that those negotiations are happening, and they are making progress on that front. So I believe we're going to get back to it. So I think, just to summarize, I think from an MPC perspective, they'll probably be telling themselves, it's too early. Let's wait. We've seen some stability in the local environment, but the external factors may come to bite. So for that reason, let's just pause and see.
Pause and see at this point. And, sometimes you think pausing is nothing, but that's actually something.
It is.
We'll continue the conversation. It's still early time now, and very soon we'll be hearing from the central bank governor. But we'll come back to the conversation. I still have with me Mr. Paul Alaje and Mr. Hakeem Mohammed helping us unpack what's playing out for this decision day. But let me quickly now pivot before we go there now. Let's hear from Lars Holter now. Hello, Lars, in Berlin.
Hi, Lottie, how you doing?
I'm doing great, Lars. So talk to me, what's playing out in the markets there in Europe?
Well, it is actually interesting. Again, it's one of those days, Lottie, where not much is actually happening, and we're seeing the indices up only a tiny little bit. FTSE and the CAC 40 in London and in Paris, respectively, up just about 0.5% or so, and the same is true for the DAX in Frankfurt. But at what level we are seeing this, that's extraordinary. For the DAX specifically, we just crossed 24,000 points in early morning trading, and it's yet another record high, yet another barrier broken through. It is pretty unbelievable that this is happening. Like there's not enough bad news out there to warrant a bit more caution, I would say. But particularly bad news from the US, for example, doesn't seem to even interest traders anymore. And if there's no news, some look at it already as good news. There was apparently not much progress, for example, on that Ukraine call with Trump and Putin just yesterday. But investors are saying it still looks like there might be an end to the conflict inside, and they're using it as yet another reason why they should buy. So there's just this crazy optimism out there. We're seeing highly motivated buyers.
Right. Let's look at Brexit now. There seems to be some kind of a comeback or drawback at this point. With it's been over 9 years, so far since we had Brexit. But what's playing out now? There's news out of Brussels.
Yes, indeed, Laladi, this is quite a story what happened there, what transpired, obviously over months, but basically broke through today. And if I might just want to remind you a little bit of what happened here 9 years ago when we had that referendum over in England, in Great Britain, where a slight majority decided to leave the European Union, the EU single market. And there was a whole host of reasons why some Brits didn't want to be part of anymore. One, of course, was immigration, with many there feeling that too many immigrants moved to the UK to live and work there. Other Europeans who were by EU statutes allowed to move freely within the Union. And then, of course, the big reason why Brits wanted to move away from the EU was that the economy over there was weak. They felt they didn't benefit from EU membership, that it was just too costly. And now, of course, what they had to learn is that since they broke away from the European Union, things only got worse. And what we're seeing now, the Brits, yeah, Ladi, they seem to be coming back to the table. They're not coming back into the EU, of course, but they did now move on a trade agreement between the UK and the EU, which they really wanted because Brexit really, like I said, hasn't helped the country's economy at all. So it was still, of course, a very tricky discussion that they had over the last couple of weeks, especially the fisheries. At the time, one of the big issues, they protested against the fierce EU competition they had problems with for so many years, fearing for their fishing grounds. And now EU fishers, for example, can fish again in the UK waters, but the British industry will benefit from some subsidies, as well as generally Britain and their entire trade will have easier access to the EU, in parts to act with agricultural goods and with food exports, including meat and dairy.
All right, still a developing story. We'll keep tracking that. Thank you so much, Lars Holter, for bringing us up to speed on what's playing out in Europe. Thank you.
Yeah, thank you, Ladi.
All right, so bringing it back here, let's do a throwback now to the previous decision there by the Monetary Policy Committee. They retained MPR at 27.50%. If you can put that slide up for me for the MPC February decision, they retained that 27.50%. Asymmetric corridor was retained at plus 500, negative 100. CRR for deposit banks at 50%. CRR for merchant banks, that was at 16%. Liquidity ratio at 30%. That's going by what decision that we had for the last meeting in February. Then we'll also discuss what's happened, so far. We'll take a break now. When we come back, you get more of the details. Just stay with us. Welcome back. It's still decision day right here in Lagos, Nigeria. And we're beginning that decision from Abuja. And we see the room right there. We'll be getting all of that information. We see it's already getting packed there in the room from the last visuals that I saw right there at the CBN office in Abuja. And we're going to be unpacking definitely what's before this MPC. It's all about exchange rates, volatility, price stability, at this point, because we've been talking about inflation for the longest time, and we still have right here with us to help us unpack all of this. We have Mr. Paul Aleje, he's the Chief Economist, SPM Professionals, and Mr. Akeem Mohammed, Executive Director, Global Markets and Institutional Banking, FSDH Merchant Bank. Thank you both for staying with us, and definitely it seems. When you report inflation so much, that's rising inflation, we've been reporting it for the longest time now. It almost feels inflation is a part of everything, at this point. Currency volatility, that's also there. Then, we did get a survey, inflation expectation from firms and households. Inflation driver, we see energy, PMS, diesel, and electricity. 91% firms, 91% say they expect that's going to keep driving up inflation. Households were 88%. Exchange rate volatility, firms said 89.4%. For households, they were less bearish there, 82.5%. Transportation costs, definitely that impacts a lot. Households say about 86% of households said that's a major driver. Firms, 88.9%. So these are the issues here. Interest rates, that's also 84%. Households say 80%. Security concerns at this point. From the last inflation numbers, we did see for Benue State alone, their food inflation was about over 50%. And for obvious reasons. We've seen the security situation there, and that has definitely impacted, food production, in the region. In your view, looking at all of these inflation drivers in energy, exchange rate, transportation, interest rate, security concerns, it seems the odds are stacked against this committee, at this point. How are you seeing that?
Well, so, the other time I said that, it's unlikely that they would do anything, maybe it's hike or start to cut at this point in time. Right? And that's because, like you rightly said, inflation has been stubbornly high. It's something that they've struggled with. And all of the rate hikes that we've seen, or the contractionary stance that the MPC has taken over the last, call it 18 months, is really down to how they've tried to use this to fight inflation. But, inflation in Nigeria is not something that I think, at least in my own view, that can be fought by monetary policy alone. All hands must be on deck. So, for example, you mentioned security. That's not something that central bank was supposed to address. So, all the agencies, everybody must come to play to the party. But if you look at, so I think yesterday or the day before, we're looking at the inflation numbers that has been released, and if you look through it, you actually see that food inflation is coming down. So it's come down for the last 4 months.
About 21.26%.
Yeah. So that means that unlike what we saw, sometime last year, where consistently, food inflation was going up, and I'm not really talking about what happened with the rebasing, because rebasing to me is just a statistical exercise. It doesn't really tell much. But what you then need to see is to say, okay, based on where we are, the rebase level, what is the trend? And the trend has been lower, right? I think where we still have a challenge is in the energy space, so fuel and electricity. With what has been done now, with the fuel subsidy removal, it then means that we're exposed on two fronts. So one, what happens to exchange rates will impact what price we pay for PMS, for example, and also what also happens in the international market around how crude oil prices are. That will also directly impact what we do. I think the one where we're still struggling with is the electricity. Folks who, for those of you...
Shout out to Band A.
So I feel for the Band A customers, right? But if you then think about the businesses who, these things are inputs to what they produce, right? So inflation, affects everyone. Like you mentioned, that you did out some data a few moments ago around how it impacts individuals, households, and firms. This thing is going to bite in different ways. But the summary is that it's something that is concerning, and that's why you see every time we come to have these sort of sessions, or even the MPC as they are wrapping up their meeting, that's something that they'll be looking at. Yes, we've seen it come down. It went up again. In April, it's come down, right? So they will be saying, okay, we still need to see maybe another 1 or 2 prints to be able to determine whether indeed the trend is this way before they start to...
We can't decide the trend.
To take action, because it's just been going, right? So you need to see it go one, maybe another one. Then by the time you go for the third one, you can then say, okay, yes, maybe it's time to start to look at this thing again. But as it is, it's clear that, at least based on what we've seen, that the trend is lower, but we still need to see maybe 1 or 2 more prints before they can start to say, okay, yes, indeed, we are already, we can already start to cut.
Yeah, and I see Mr. Alaje is concerned about the base year implications at this point. Maybe we'll move that up, at some point and get the true picture, of what's playing out. But, Mr. Alaje, I guess this conversation, we cannot escape tariffs at this point. We've seen pauses and on pauses, in the global scene. But do you think this MPC will take that into consideration? Are they worried about, the tariff wars?
I think the MPC will necessarily. As a matter of fact, the MPC in the last 2 meetings I've observed, they've been very sensitive to externalities and things that are coming that are beyond their control, both local and those that are outside Nigeria. Tariff is very important. But like Mr. Akim rightly mentioned, it's important for us to know that economy stands on 3 legs. Every economy stands on 3 legs. The first one is monetary. In Nigeria, I think monetary is what many of us emphasize. But as economists, we now realize that monetary only play 33.3%. In the university, if you score 33.3%, it's a failure. Perhaps if we put the whole load of 100% on 1 leg of monetary, it will naturally fail. The second leg is fiscal. So if you are talking of inflation and we're looking at tariffs and we're looking at, because tariff essentially is what you are selling to the rest of the world and what they tax you for bringing the goods and what they sell to you, and they feel that, oh, we are charging them more. We are charging more American product more than they are charging Nigerian product. I want to reduce the world to Nigeria versus America now because, of course, Trump changed the narrative for everybody. Now, the third one, which is very important, is trade. Under trade, very less is spoken of, at least in the last 50 years or 55 years that we have been studying the Nigerian economy. Now, when you look at trade, it has to do with, it's not buying and selling I'm referring to. It has to do with what we are selling to the rest of the world and what we are buying all around the world. You see, until these 3 policies converge, which I'm not saying that they are not talking, but I'm saying that their policies are not converging, not just enough at this time. Now, if these policies don't converge, and Nigeria must also show new energy towards exports, and this export must go beyond just crude. I'm talking of non-oil exports. And not that we have some 10% increase in non-oil exports. It will get to a time where orientation of an average Nigeria will be, I want to export. I hear, the way we say that, I hear money is in oil and gas, is the way we must start saying that we hear money is in export. Let me give you an instance. I'm sure you've read about Korea. Korea in 1903 was a very poor country, extremely poor country. In fact, we are better than them in 1960. When you look at income per head of the 2 countries, Nigeria was an advantage compared to Korea. But what did Korea do? What did Malaysia do? These were countries that were beneath us. What did Singapore do? What did those 3 countries, what did they do that made them to be countries that their per capita income per head, when you share it, is more than double of what Nigeria, the same country that was far ahead of them. It's simple. Even though Korea was faced with division, the country divided into 2. We had the North Korea and we have the South Korea, which generally people call Korea. That's 1. 2. We also saw that Korea has witnessed military intervention. So it's not just unique to Nigeria. There has been military intervention in Korea. But you know the difference? The difference were 3 things, and I hope I have time to share them. The first one is that Korean leaders, whether military or civilian, but most importantly under civil rule, understood that what they must do is to start cooperation that we export to the rest of the world. Can you believe that Samsung had nothing to do with electronics when they started? It was not doing electronics. It was doing something within the agro space. But today, look at where they are. Government must now understand that if we want to get to that point where tariff will not affect us as much, we must look at seeds of economic miracle, which include Dangote refinery in Nigeria. How do we make sure that that refinery become more competitive? Not just in Nigeria, even to other producers around the world. Which industry, which firm, which organization has the capacity to produce such that the production will go beyond what we can consume locally, and we can also push it to the rest of the world? So when America says that, don't worry, if you want to buy America, this will be the new rate. We saw the rates where imports from America dropped significantly, you know, because of the tariffs and what is going on between the two countries now, and not just us, the rest of the world. So we must ensure that things we want to export must be things that are finished products, not just semi-finished products.
I'm talking about finished and, you know, semi-finished at this point. If we look at oil production, because that's where we get our major, you know, foreign exchange from. We're seeing for the latest data, 1.486 million barrels per day. That's for average daily production. Direct data production, we see is 1.46, so around the same level. Oil price, $66, you know, at that point. But today we're seeing, you know, sub 66. That's for Brent. Then with the budget mark, benchmark, $75 per barrel. So we're way below that, you know, at this point.
So way below on both sides.
Yes, and even for the budgeted, you know, output, you know, at this point. And you're also mentioning, you know, the non-oil sector at this point. We need to see more growth, you know, there. So, you know, looking at where we are now and, you know, trying to balance our reserves, you know, we're trying to get more USD. What can we do short term to actually, you know, change this narrative, knowing that oil prices are dropping, production is not meeting up? What do we have to do like yesterday that can see some short-term gains?
Well, we already saw that government is faced with revenue generation from taxes and other charges, and we have seen that has improved significantly. FRA's target was surpassed last year, even though it's a target they set for themselves, but that target was well surpassed last year, which is very significant for me as a person. Because when you look at what we did last year, it's not that it's fantastic in oil, but what actually protects many of us is what we gained from tax sources. That is what saved many Nigerians. But that on one side. On the other side, yes, the global oil prices has been affected because of the tariff. And it has been affected to a very large extent, almost $10 per barrel. Multiply that by nearly 600 barrels, 600,000 barrels on daily basis, multiply by for the number of days, then you know how much we have lost in revenue. That if you convert that to Naira, then you see how much would have been shared in revenue. That, you know, it's not all. There's a component that goes to the federation, and from the federation, what now goes to different tiers of government. That is very significant for us as a nation. So here is it. We know that those revenues are gone. What should we do in the coming period? Is first, economics that we plan on quick fixes. The last administration, I was vehemently against quick fixes. Let's just quickly fix it and move on. So if you say short term, I may not tell you so much, because short term is just tomorrow. But we will live beyond tomorrow. We want to see the day after tomorrow. The question is, we will still exist. Our policy will decide whether we exist the day after tomorrow. And what policy we should be looking at is medium term and a relatively long term. When this long term, I'm not saying ad infinitum, I'm saying in the next 5 to 10 years. If we make, what policy are we going to make today to make us still exist? You see, before you make any policy, and I keep saying it, I said it to 2 or 3 other presidents, get something right, get electricity rights. You see, if we get electricity right, we will not bother so much about what is coming from crude. Why? You already have a set of people that are industrious in nature, and those are Nigerians, whether local or abroad. But you see, you cannot just say you are very industrious and you start punching the air. Even to be a boxer, you need to get a punching bag, then get an opponent and go for a tournament, then you win a belt.
Right.
The challenge here is that tool that we need to work is electricity. For our country, research reveals that we need about 50,000 megawatts to be distributed. But what we have is about 5,000 megawatts that is generated. Now, between generation and distribution, there are losses. So eventually at home, to be charitable, when it comes to distribution, we may get about 3,000 megawatts. Compare that percentage of 50,000 that we require. So with all the good intention of government, all the policy government is making, why is it that it's not really impacting enough? Why? Because if you check, you look at it on paper in economic theory. When we do this, this is supposed to be the result. The difference is that even when the First World War happened in 1945, and everything that happened in Europe, to the point that for you to be a woman, that's female gender in Europe, in 1945, immediately after the war, it was a big issue. Because it was war of all against all. Everybody had arms and ammunition. So it became difficult for women. Rape was very ubiquitous. But you know what? The foundation, the fundamental for development was available to them. Electricity did not disappear. So for us as a nation, we must understand that, you see, power, electricity, to power what? Is it for us to watch just television? No.
Netflix? No.
But not Netflix. I get you. That's what I wanted to say. Just to watch Netflix? No. It's for us to power our industry. See, the rest of the world has told Africa, just farm for us. No, we want them to. They are farm. I've been to a few places. Their land too can grow some of the things we are growing here. So you farm for Africa. Let Africa be the one to produce. You know why? The person that manufactures will naturally dominate those that are farming.
All right.
So if we can position and have a plan, we have Manufacturing Association of Nigeria. Beyond the association, what is it that Nigeria consumes the most? We go to data. What do we consume the most that go our reserve the most? Let's have a 5-year plan. From now to the next 5 years, President Tinubu says, Nigeria, you seem to buy a lot of television. So we're going to make policy. Come and chair it, Mr. Hakim. We'll make sure energy, we may not be able to provide energy for the entire Nigerians. But you see this production zone, we will make sure there is no power outage, either through NEPA or through alternative sources. What will that guarantee? 1, jobs in that market. 2, we will now save our reserve of what is going on. Because some of the policies CBN will make today, exchange rate must be in view. Why? We have imported something. And people say, why does everything matters to me? You see, that my sister that bought Weave-On, and the Weave-On is imported. Even though you are a human being, you bought human hair, because you feel it makes it more beautiful. And you are buying one from Brazil. You are telling central bank to be under pressure. Because whether you like it or not, they have to provide the dollar.
Yeah, so much you're packed there. Mr. Alhaji, very interesting one there. And, you know, my producer did tell me that the central bank governor is seated right now, and we see the room already buzzing, you know, with activity. We're going to get his presentation in a few minutes, you know, from now, and we see him seated, you know, getting ready, waiting for the clock to strike. Then he'll let us know what's happening right there with borrowing costs. But you know, Mr. Hakim, talking about borrowing costs now at this point, you know, one would think, you know, the banks are better off, you know, at this point. And, you know, looking at, you know, loans at this point, we see the banks, we've seen some results, you know, not looking too bad at this point. Is it that rosy, you know, in your industry?
Well, you know, banks are intermediaries, right? We take from areas of surplus and deploy for those in need, right? So yes, you may say that if you compare this where rates are versus last year, you will say that our rates have grown significantly, but also so has the deposit rate. So our cost of funds as banks have also gone up. But you know, I understand why, you know, people would say that banks are making a lot of income because rates have gone up. But I think, you know, it's something that we do know that rates, based on where they are now, is not really sustainable in the long run. So at some point, especially for the risk sector, we should all be concerned about. So
yeah, because the organized private sector, they did speak today, and they're saying at this rate, you cannot borrow and make profit.
Yes. Yeah. So, but yeah, that may be true. But you know, like I said, we didn't just accept what is there in the market. Central bank, like what they are going to do today, are the ones that will anchor where they want to. They will have to signal where they want rates to be. Now, at a point in time, they were more focused on fighting inflation, getting the exchange rate stable. And I think at that point, the right thing to do, you know, the economists here would agree, is that you need to raise rates to be able to curtail the demand for FX and, just to get things stable. Now, we're at that stage now where things have sort of become stable, a bit more stable than it was at that time. But I think, it's probably, we're already in that zone where we need to now start to think about what happens to the risk sector. But they need to be careful with how they pace it. Should it happen now? Should it not happen? All of that is what I expect that things we're going to hear from the CBN governor. I can see that he's already seated.
Right, he's seated. He's ready. Getting ready at this point.
Yeah. So for me, and maybe I should just quickly go to the point you made earlier.
So you hold that thought now. I believe the governor is speaking right now. Let's take a listen.
100th meeting on the 19th and 20th of May 2025. The committee reviewed developments in the global and domestic economies, including the risks to the outlook. All 12 members of the committee were in attendance. Decisions of the MPC. The committee was unanimous in its decision to hold policy and thus decided as follows. 1. Retain the MPR at 27.50%. 2. Retain the asymmetric corridor around the MPR at plus 500 to minus 100 basis points. 3. Retain the cash reserve ratio of deposit money banks at 50% and merchant banks at 16%. 4. Retain the liquidity ratio at 30%. Considerations. The MPC noted the relative improvements in some key macroeconomic indicators, which are expected to support the overall moderation in prices in the near to medium term. These include the progressive narrowing of the gap between the Nigeria Foreign Exchange Market, NIFEM, and Bureau de Change, BDC windows, the positive balance of payments position, and easing price of PMS. Members also noted with satisfaction the progressive moderation in food inflation and therefore commended the government for implementing measures to increase food supply as well as stepping up the fight against insecurity, especially in farming communities. The MPC thus encouraged security agencies to sustain the momentum while government provides necessary inputs to farmers to further boost food production. The committee, however, acknowledged underlying inflationary pressures driven largely by high electricity prices, persistent foreign exchange demand pressure, and other legacy structural factors. The MPC noted new policies introduced by the federal government to boost local production, reduce foreign currency demand pressures, and thus lessen the pass-through to domestic prices. Given the relative stability observed in the foreign exchange market, members urged the bank to sustain the implementation of the ongoing reforms to further boost market confidence. The committee also called on the fiscal authority to strengthen current efforts in foreign exchange earnings, especially from gas, oil, and non-oil exports. The MPC, however, expressed concerns about the recent decline in crude oil prices attributable to increased production by non-OPEC members, as well as uncertainties associated with U.S. trade policy, which present new challenges for fiscal receipts and budget implementation. The committee reaffirmed the continued stability of the banking system following notable improvements in key performance indicators and observed the appreciable progress in the ongoing recapitalization exercise. Members thus called on the bank to sustain its effective oversight of the industry to ensure compliance with regulatory and macro-prudential guidelines. On the strength of these considerations and driven by the continued uncertain policy environment exacerbated by ongoing global shocks, members weighed the available policy options and were unanimous in their decision to hold policy to enable a better understanding of near-term developments. Members reaffirmed their commitment to prioritize policies targeted at anchoring inflation expectations and easing exchange rate pressure. Key developments in the domestic and global economies. According to the National Bureau of Statistics, NBS, headline inflation year-on-year declined to 23.71% in April 2025, compared with 24.23% in March 2025. On a month-on-month basis, it also declined to 1.86% in April 2025 from 3.9% in the previous month. Both food and core components contributed to the decline in inflation in the period. Food inflation eased further to 21.26% in April 2025 from 21.79% in the previous period. Core inflation also declined to 23.39% in April 2025, compared with 24.43% in March. Real GDP year-on-year grew by 3.84% in the fourth quarter of 2024, compared with 3.46% in the preceding quarter. This improvement was driven by both the oil and non-oil sectors, with the services sector being the major contributor. Gross external reserves increased by 2.85% to $38.90 billion as at 16th of May 2025, from $37.82 billion at end of March 2025. This represents an import cover of 7.6 months for goods and services. The balance of payments recorded a surplus of $1.10 billion in the fourth quarter of 2024, compared with $4.21 billion in the preceding quarter, on account of moderation in current account surplus. Although global output growth is expected to remain positive despite existing and emerging headwinds, the International Monetary Fund, IMF, downgraded its global growth forecast to 2.8% in 2025 and 3% in 2026, compared with 3.3% in 2024 due to the uncertain policy environment. Members were thus unanimous in their resolution to maintain close surveillance of developments in both the domestic and global environments to enable appropriate policy response to emerging shocks. The next meeting of the committee is scheduled to hold on the 21st and 22nd of July 2025. Thank you.
Thank you very much, Mr. Governor. That was communique number 157, presented by the chairman of the MPC and the governor of the Central Bank of Nigeria, Mr. Ilayemi Adesu. We now take some questions from the members of the press. Please state your name, your media, and ask your question.
Thank you, Mr. Governor. Good afternoon, members of the MPC. My question is around big players now starting to get a Nigeria's macroeconomic comeback story. Recent assessments, of course, suggest that the IMF being paid, World Bank giving a nod to ongoing reforms now. We also saw, I think, Fitch ratings. We also saw Fitch ratings just, I think, a few weeks ago, boosting Nigeria's outlook from stable to positive. On paper, things are looking up, but inflation keeps biting. We just got a report from MBS, I think was it on Monday or so, that inflation now is at 23.78%, still double digit from 24.23%. The real question actually is that if the numbers say we're on the right track, it still does not feel that we're on the right track for Nigerians. How do Nigerians interpret this into meaningful impact? That is my question to you, Mr. Governor, because inflation is still rising, prices are still there, Nigerians are still, it's still high for many of us living in the country. Thank you very much.
Thank you very much, Nancy. First of all, let me make the comment that the Fitch upgrade is particularly important because it was coming at a time where there were global economic headwinds and shocks, and there was a lot of uncertainty. So it's important for us to realize that in spite of all that, there was a move by Fitch to upgrade. And I think that is a very, very positive signal. It's a very, very positive measure. Now, in terms of how this whole macroeconomic fundamentals are playing out, in spite of the fact, like you said, there have been positive endorsements from all kinds of bodies that make it a point of duty to observe and critique the moves that various countries are making to ensure they have stability in their economies. And your question basically is, well, that may seem positive, but how does that translate to getting the feeling that things are better? Now, I think it's important to say that investors, and let's face it, without investments, economies don't grow. Investors don't go to where there's instability. So I think that is the first thing to understand. On the journey, and this is a journey, investors don't go out to invest to lose money. They go out to invest because there's stability in an economy and they can plan. With that stability comes confidence. With confidence comes investment. And with investment comes growth and output. I think that's definitely the trajectory that you will find in all countries of the world. We obviously have been through a long period of instability. And I think that clearly what is being recognized is that the Nigerian economy is now stable and there's interest in those who want to invest to now invest. Clearly, the inflation numbers themselves speak for themselves, and I've discussed that here, I've mentioned that here, they speak for themselves. The overall trajectory is in the right direction. Not one particular aspect of management is a bullet that will solve all the problems. It isn't. It's a multiplicity of different endeavors. And that is why the combination of the efforts that are being made and are yielding results in terms of stability. And don't forget, the central bank is the custodian of stability in an economy. If you look at the exchange rate, for example, volatility has reduced from over 4% a year ago to less than half of 1% around now. So that's an indication of stability. And with the increasing collaboration between the fiscal and the monetary side, definitely the journey that we are going through will begin to yield greater results as time goes on. I have no doubt about that.
Good afternoon, Mr. Governor. My name is Ndukache, Constitution District. I have 3 questions. One, Nigeria recorded a 6.83 billion balance of payment surplus in 2024 from the result of this recently. This signals a renewed economic momentum. But with the rising global risk and threat of external shock, how is the CBN assessing the sustainability of this surplus? That is one. 2, with external reserve rising from $36.6 billion in 2023 to $38.8 billion in 2024, how does this strong reserve position enhance the bank's ability to stabilize the FX market in the face of ongoing global uncertainty? And thirdly, you've seen currency depreciation following the global response to U.S. inflation data. How are you preparing Nigeria for the resilience amidst heightened global uncertainty?
Thank you very much. Well, on the issue of depreciation of the currency, which obviously everybody is always very interested in, the way I will put it is to say that if you look at and make the comparison between Nigeria during the last month or so, month or two, when the whole issue of global tensions got heightened. And let's face it, right now we're in a period of heightened uncertainty. And if you are all observing, you find that the various currencies of the world were under attack and were having to defend themselves. You find that relative to other countries, Nigeria came out very well indeed. We were able to ensure that our depreciation was very, very modest and that the stability was pretty much there. And that, in my view, was a reflection of a lot of the measures that we had taken prior to this time to stabilize our economy. I dare say that if those actions had not been taken when they were, the results would have been a lot more disastrous. Well, it would have been not even more, it would have been disastrous for us. They would have been disastrous for us. So it's a good thing that we started these reforms early and that we stayed the course to the point where we built buffers which are able to withstand shocks that come in. And that really sort of dovetails into your issue of reserves. As with our reserves, and here again, it may be necessary to just make a slight digression to re-emphasize what I'm about to say. We published our reserve numbers recently. And if you observe there, our reserve numbers went up from net reserves now, net reserves, went up from slightly over 3 billion US to about 23 billion US, which was a quantum leap in our reserve position. Okay. Again, I would say that all these are happening as a result of transparency in process, ongoing reforms which are giving confidence to many players in that industry who perhaps had been on the sidelines up to that point in time and are bringing about the results. And I always say that the numbers speak for themselves. Beyond the gross reserves, which are 40 billion as at that time, the net reserves have grown quantumly. And that will continue to be, and that will continue the path whereby we will ensure that we have sufficient buffers beyond the IMF 6-month import cover to ensure that we continue to keep our economy in a safe and sound mood. The sustainability of the surplus you talk about, and again, I must comment that in itself speaks volumes, because you have a situation where beyond just oil prices, in fact, if you look at the oil sector itself, you find that the importation had gone down with the Dangote refinery and all the other refineries coming up. the demand obviously will go down. The gas exports have, been on an upward trajectory. Now that we have a competitive currency, and it's something that you will hear me talk about over and over and over again. Our currency now is more competitive. So this should encourage exports. And indeed, for us as Nigeria and Nigerian businessmen, the opportunity to extend that dragnet into our sub-region is also an enormous opportunity now that we have such a competitive currency. So, to answer your question, my belief is that if we continue doing the things we have done up to this point in time that have resulted in a positive surplus, we should be able to, in fact, improve that without too much of a problem.
Mr. Governor, sir, members of the MPC, my name is Sarah Channels TV. Most recently, we saw you engage with Nigerians in the diaspora, as well as meeting with investors to see how they can invest in the country. And most people have described this initiative as commendable. But the question is, how do you hope to sustain this momentum and then restore confidence, especially with the budget that's been described by many as unrealistic? And then the second question is, how can Nigerians and investors trust that the bank will fall back into the same old habits of damaged credit in the past?
Thank you very much. Something I've constantly said and will repeat is the fact that we are, at the central bank, we are on a mission to restore confidence and build back trust. We're in a mission to restore confidence and build back trust. And we appreciate the fact that in this journey, we need all stakeholders to find that they are dealing with a central bank that will not disappoint. And that is the reason why some of the things we did and we have done up to this point in time, it may seem like nothing, but it's a big deal. For example, when we talk about publishing our net reserves figure and doing it, there's a reason why these things happen. People have to know that when the central bank says it is going to do something, it does it. We recognize that there's a need to rebuild our institution, the central bank. We recognize that. And I assure you that we are doing everything possible to ensure that that happens. It isn't something that will happen overnight. It's not possible. There are a lot of areas that we literally need to reset completely and start all over again. And we're doing so. But those things do take time. They do take time. But what I want to assure you is that we will be consistent as we have been over the past 18 months. And we believe that once we continue in that direction, we will be successful in building back the trust that has been so badly eroded over a period of time. I'm happy and pleased, I must say, that particularly in the international arena, and you mentioned it, both the IMF and World Bank meetings, and the very successful outing that we had in the NASDAQ building in New York. The feedback from those particular engagements have been very positive. And I recall that there was a particular, the person that moderated one of these sessions was quoted as saying that They have been covering these activities in Nigeria for so many years. And this is the first time that they have seen so much interest in investors coming to Nigeria, that it is no longer a question of should we be there. It is a question of when we will be there.
Recently, the central bank has announced major changes to the documentation requirement for an African payment system transactions. My question is, what prompted this decision, and what impact do you expect to have on cross-border trade?
Thank you very much, Musa. Let me first say that, as you said, your question is one of your questions is what prompted this decision. And I want to say, for the avoidance of doubt, that this is something that has been a long time coming. It should have come earlier. But in any case, be that as it may, it couldn't be coming at a better time. And the reason is as follows. As I had said earlier, we have a relatively more competitive currency. There's already a lot of trading that takes place, especially in the sub-region. Okay, a lot of trading takes place there. And much of what you find is that those who trade in that route are subjected to enormous risks. Doing it with a payment system that is secure and safe will eliminate those risks. You know, one of the outcomes of the discussions we held at the spring meetings and also in New York was obviously the concern with respect to tariffs and the impact that tariffs have on economies. And increasingly, the discussion started to come up that various countries should see means of collaborating, amongst themselves, particularly on a regional level. So I believe that having a payment system that is safe, secure, and can be relied on is a step in that direction. It will automatically put people who up to this point in time, as I said, had used risky means, moving physical cash from one place to the other, that's all gone. And I realize also that sometimes it takes a while for people to test these systems and to have confidence in them, which is understandable. But I just want to say that, they don't have to. Okay, and that if that payment system is well ingrained with the openness of economies, especially now that we know that the risks to global trade have become a lot more uncertain. This could be a means of ensuring that the catalyst for trade in the sub-region is set alight.
All right, there you have it. We have the decision for the May MPC meeting. And yes, it was unanimous at this point, according to the central bank governor, to retain the MPR at 27.50%, a symmetric corridor that was retained at plus 500, negative 100 around the MPR rate, and CRR for deposit banks, 50%, CRR for merchant banks, that's at 16%, liquidity ratio at 30%. And, definitely the governor did mention a couple of things, that were before this MPC. Security matters, how that's affecting food production, in belts like in the middle belt like Benue. We've seen the security matters there. So definitely he's urging security agents to ramp up, scuttling all of that security issues we see there. Then he talked about the reasons for elevated, inflation, even though we did see an easing there. High electricity prices and forex demand pressure. He also mentioned the U.S. trade policy tariffs and the positivity he's seen around the bank recapitalization, so far. So a lot, the governor unpacked, for us there. So it's unanimous. It's hold as expected, according to, consensus. And we still have right here Mr. Paul Alaje and Mr. Hakeem Mohammed. They've been helping us unpack the matters, so far. And I guess this is according to expectations, at this point. Let me come to you now, Mr. Hakeem. So this is exactly what was decided, last time. And I'm particular about, the CRR for deposit money banks and merchant banks. That's at 16%. So since the last decision, how has that decision impacted business? Like, I know you play in that, sector up till now. Yeah. What have you seen?
Well, I mean, they've implemented it, and we've seen them, mop up liquidity, at different times, So you remember that apart from the CRR, the central bank also has some other tools that they use. So every now and then they come into the market, they issue mobiles. But what this just tells us is, and in line with what we had said, earlier, that they probably would hold, and they want to see, what then happens. The governor mentioned when he was presenting that, he was quite happy with the moderation they are seeing in food inflation, and just like we also said, they are sort of okay or happy with the trajectory of inflation, and they believe that would naturally come down. And when that does happen, that then gives them a reason to then perhaps start considering whether to cut. For banks, I guess, to the extent that they are not touching all the key parameters, it means that things are probably going to stay where they are. We then just sort of see what then happens, because we're already comfortable or happy with what what they just read out again, because this is really what we've seen, I think, 2 MPCs ago, right? So we're not very, maybe not very impacted. But one of the things he said that I've also found maybe quite interesting is that the central bank seems to be happy also with the level of exchange rates. He sort of mentioned how they're fine with the rates, even despite what happened with the trade tariffs and all of the disruptions we saw back in April, that the Nigerian economy seems to have weathered the storm, in a very nice way.
Well, has the storm come?
Well, we did see some of it, in the aftermath of that. We actually saw quite a number of portfolio exits. But one of the reasons why we didn't really feel the full brunt was because of how proactive the central bank was around intervening to provide FX liquidity. Because if the CBN did not come into the market to provide the liquidity, you probably will see a lot more exits. Because again, these guys are just trying to test the waters, right? They have portfolios all over the world. Because of what was happening, there's only that flight to safety. Let's exit all markets, especially the emerging market. Let's take the dollars back to the US or the advanced economies. So, and they tried to do that. But to the extent that the central bank immediately stepped in to provide liquidity, I think that may have stalled some people from pushing further. Because we did see some exits, but the central bank intervened, and we've seen them intervene, I probably would say 3-4 times every week since then, just to ensure that anyone who wanted to exit had liquidity, and to ensure that the disruption was minimal. So I think they did do that, and that's probably one of the reasons why we're not that impacted. The currency went as high as maybe 16.45, but it sort of traded around maybe 16 figure to 16.20 or so over the last 2-3 weeks, and we've seen that range maintained.
Right, and definitely that's good.
Mm-hmm.
When you see that range being maintained, even though some of us are still finding it hard to get used to these current exchange rate. You know, some of us, I feel we're still trapped in somewhere around 600. Wow. You know, to the dollar, maybe 800. You know, some of us mentally. You know, mentally.
The ship has sailed.
You know, because but Mr. Alade, you know, he unpacked a lot, you know, there, and it's still within expectations at this point. What stuck out for you?
Well, for me, I think the bank will still have to deal with their 20% because for DMBs, cash reserve requirement or cash reserve ratio of 50%, which they will not have access to, their liquidity ratio will be 30%, 20% in the economy. So you see, economy is about trade-off, and it's about choices and picking the best, staying with the best alternatives. 100% of what you take to the bank, what is the meaning? Again, is that 50% goes to the bank, to the Apex Bank for your CRR. 30% is what bank cannot touch. 20% is what they can lend to people. Now, from this 20%, the rate at which you get it, the baseline is already shared. What does this mean? We still have high energy to combat inflation, which is what we have done. Now, because we still want to combat inflation, even though there is no increase in all of this, and arithmetic corridor remains the same, what it means is that interest rates, lending rates, or borrowing rate from banks will still be as it is, and it is still very high. The question is, with this high rate, are we able to achieve taming inflation? Are we able to bring down inflation? Now, the governor said that when you compare this year inflation with last year inflation, it reduced to about 23%. Actually, inflation did not reduce, according to the National Bureau of Statistics. It's not reduction that they are talking about. They are talking about a change in base year. It was over 30% based on the base year we were using last year. Now, econometricians will be very careful to call that reduction and to even make policy. So one thing I'm happy with is that we didn't use that figure to make decisions. As a matter of fact, in economics and in econometrics, we are going through a period of outliers number. Because the numbers will be, until the Bureau of Statistics shows, the only thing that may make us make decision will be a very short term, which is month on month. We saw reduction in month on month from, I think, 1%, to about 3% to 1%, inflation reduction on month. But that's too short period of time you can make a national economic decision. It's too short, you cannot. But where is the real conversation? The real conversation here is that on one hand, we want inflation to go down. On the other hand, we want to have our economy expand. This is a trade-off. You cannot have the two consistently at the same time. So when you saw the policy today, I think Central Bank Governor gave hints that for things to be better, he didn't say it directly in that term. One, you need to have improved security. Number two, we need to pursue after economic balance more than having an improved Naira or reduction in the value of Naira. And what is the most important is that as of now, we are doing relatively better in our term of trade and balance of payment. And he also noted what the international agency projection had on Nigeria. One of the persons that asked questions talked about Fitch report, which he said that is very significant for us. But remember that in his presentation directly, he has hinted about IMF reservation of Nigeria expected growth, unlike what we have now, above 3% to 3%, and the subsequent year, about 2.7 or 2.8%. And as a result, it's noted that the Apex Bank or the MPC will watch for our policy environment and the global or local domestic environment so that we can respond to any shock in the coming period. But in the real sense of it, when you look at what is happening to food inflation, which according to him, it's an improvement. But this is what we need to watch because our numbers must add up. When you look at insecurity, we said that insecurity was one of the factors that has affected a state like Benue State, where they have very high food inflation. But at the same time, we said that food inflation reduced because most parts that inflation affected.
How does that math work? You know, really.
So it's not hard enough. That's what I'm saying. So I'm going. That is not hard enough. And that is why you see, we need to reconsider the numbers we are basing our decision on. And that is why I say, you see, the most important thing for us as a nation is data. We have left insinuation or how we wish the thing happens. We need to look at the number and the integrity of the number we are releasing. as our national number. Because if one hand we say that the insecurity affected states and include Benue State and Niger State, and as a result, they don't have improved output or food prices, I beg your pardon, in those areas as increased. They are now having issues in terms of pricing. Yeah. At the same time, we are saying that food inflation has reduced significantly. You need to add the numbers together. That is why it's important for us to pay attention. Why? It is not just that we want to score a goal that matters. It is that can we sustain what we are saying? And I want to use the opportunity to also call on the government that we need to pay attention to data number one. Is this our real population? Let's conduct population census. Agencies that has to do with numbers, anything data, anything statistics, let's go and re-audit to be sure that, because you see, what exercise that just took place looks common to most people, but to us economists, it's one of the most important economic rituals that could be performed, because this will affect investors, whether they will come to Nigeria or not. Central Bank governor has spoken well to put that confidence in them that if you want to invest, this is the place to be. It's already marketing the nation. But it should, God forbid, that when they come, our numbers are not adding up. So I just say I should put that there, so that when they come, after all the good presentation that we have heard from MPC today, our numbers truly we had up. Yeah, so definitely a very critical point you brought up there about the data. The data has to be on point, so that we all make, informed decisions from the investor side and even from the government side of things. But, definitely, Mr. Hakeem, looking at everything that's played out, and, since it's still within, expectations at this point, going forward now, he's mentioned the next meeting, that's coming up in July. Yes. Yeah, so, definitely a lot will happen before then. What are you seeing? He's said that the currency, that's in Naira, remains competitive, at this point. What are you seeing between now and the next meeting with this decision? Well, so hopefully, given what has happened now, we have more time, I would say, to sort of digest what is going on, especially on the global scene. We're already seeing, so there's a current 90-day pause between the US and China. He had paused for the other countries, including Nigeria, maybe like a month before that, yes. Right? So hopefully, between now and that July, we'll see more clarity around, the future of global trade. So some of the disruptions that followed the introduction of those tariffs by President Trump, hopefully all of those will be resolved. As an oil-producing nation, right? As you probably know, aviation and shipping, consumes about 10% of global crude oil production, right? But given what has happened, and how China is sort of, trying to reduce what they push out to the US and all, I'm hoping that between now and July, there will be a lot more clarity around that, because for us as an oil-producing country, we need people to be consuming oil, at least for now, until we can get some other, until we can grow the non-oil exports. So therefore, I'm hoping that within now and maybe July, that there'll be more clarity around that, and that whatever it is that is holding back production in country, I know that, there's been very low investment in that space over the last, call it 10, 15 years or something, that is now biting us today. Seriously. But even based on the installed capacity that we have today, we're still not producing. I know that there was the issue in River States that sort of affected production. I'm hoping that they will be able to resolve some of those issues. And as those things get resolved, that as a country, we can then start to look at ourselves. Because if you think about what has happened, for 2025 budgets, right, the government plans to borrow 13 trillion naira. And between January and now, they've done 9 trillion already. Right. Wow. Now, and if you have pressure on the revenue side, it then means that if they will maintain all their programs, all their plans regarding spending, then they'll have to borrow more. Now, if rates stay where they are, you and I know what will then happen to the borrowing cost. So I'm hoping that whatever happens between now and July, and I'm hoping that there won't be another major disruption that then sort of, takes away, pivots us into a different direction. Otherwise, the expectation is that, when we come back in July,
there would have been another two or three prints, April, May, June, another two prints of inflation. And if the trajectory is maintained and inflation continues to decline, then they then have a chance to start to cut, which would be good for, this sector, the SMEs. I mean, you mentioned earlier, how many people can afford to continue to borrow at 32, 35 sort of levels. So I'm hoping that when that happens, and they start to cut, that some of these businesses who have really suffered these high borrowing costs over the last 1 year, 1 year and a half, will start to get some form of relief.
Yeah, definitely. They did a lot of relief, at this point. And, seeing what's playing out in the U.S., we know everyone's referred to President Donald Trump as a tariff man. But, with his recent tour to the Middle East, he's now been called the salesman. At this point, we see the deals he's been able to, make there, investment pledges in the U.S. He's definitely selling the U.S., at this point. So we're seeing these Middle Eastern countries that are heavily reliant on, oil, at this point, and they are now pivoting towards technology, at this time, with trying to get all of those chips, from the U.S. so that they can invest in their, technology in those regions. So looking at us in Africa, oil producers still heavily reliant on oil. How are you seeing that, play, at this point? The Middle East moving to technology and, African nations still focusing on oil and commodities.
In every economy, there are three types of people. Those who make things happen, those who watch things happen, and those who wonder what is happening. For those in the Middle East, is it surprising that over the years, their exchange rate has remained the same? Go and watch. For 80% of the countries, once your currency is affected, it will certainly have implication on the real sector. Our concern here is to understand that economics is made for people. People are not made for economics. So it's not just the number for the number's sake. It is what the number can help improve in the life of the people. So when President Trump went to the Middle East and met perhaps with members of G8 countries, the intention is that what can we get from you? What can they possibly get from America? Currency stability, security, so that they can plan. But what can America get from them? Beyond all the chips investment is petrodollar. You must remain committed to selling your crude in US dollars. When you do that, no matter the pressure that comes to America, America can print your currency and give back to anybody they borrowed from. Because petrodollar was what changed the narrative around the world. For Nigeria and the rest of Africa, what do we have to put on the table? And that is why when President Trump slammed tariff, remember this is not the first time in 2019 he did the same, until COVID came, 2019 to 2020, and threw the whole world in a global shock that we have never experienced in about 10 decades, if you like. But what happened? China understood better now that who can compete with global giants must also be a giant in something. For them, it was a giant in production, in manufacturing. What is Africa giant on? And how can we compete? And that is why, for the next MPC, what will it likely be? We have been hinted, he has already hinted, that we've done about 9 trillion naira in borrowing. Your borrowing, when it goes up, expect high inflation. Maybe in 2 quarters from that. So, will inflation go down? When we possibly need to still borrow money. You saw that when we paid fund that IMF gave us for COVID, what happened the next day? We started raising bonds in all the markets. We started raising treasury bills. Why? We left, so what we did effectively was we left international borrowing and we came back to domestic market to borrow. But that has implication. When we borrow from domestic market and we live in international market, remember that the risk for borrowing outside is currency volatility, exchange rate issues. But when you borrow locally, what is the implication? It's job, creation of job, economic will be affected when it becomes so sporadic. So here is it. There is no easy way out. So the administration came at a time that is really tough. There's no easy way out. And in coming out of the several economic quagmire that is battling with all African countries, one will be the dexterity of policy and those, the handler of the same. and promptness in making this policy and knowing when to stop.
Yeah, definitely. So much to unpack there. And, talking about timing, we've heard, President Trump, say some or call the U.S. Fed chair some very unpleasant names, saying that he needs to cut rates. He needs to cut rates, immediately. And organized private sector here is saying, we also need to cut rates. We need to cut rates at this point. So what's the worst that will happen if we actually look at cutting rates? What's the worst that can happen?
Well, it looks like should I say, the natural next thing to do, especially if inflation starts to drop. But like you mentioned, the fact that they are borrowing more also has inflationary impacts, right? But it appears that it's probably something that we'll have to do at some point in time. What then determines when you do it? Also, there are a lot of considerations. So, for example, if some of these global pressures remain, the CBN will have to think about it very seriously in terms of when to cut. Because if you start to cut, and you cut in such a way that for example, the FPIs that are in country no longer find Nigeria yields attractive, and they start to exit, then you will have created another problem. So they will definitely need to balance these two. They need to stimulate local growth, encourage local industries, SMEs, etc., versus the potential impact that may have on exchange rate.
All right. So, so a lot to consider there before making any kind of decision, at this point. But, I want to thank you both for coming on today. It's been quite an eventful one. And even though nothing happened, something happened. Thank you so much, Mr. Paul Alaje, Chief Economist, SPM Professionals, and Mr. Hakeem Mohammed, Executive Director of Global Markets and Institutional Banking, FSDH Merchant Bank. Thank you both for coming on today.
Thank you so much for having us.
And thank you for watching. That's the decision today. Definitely we'll give you updates on reactions to this on our shows tomorrow. Thank you again for watching. I'm Ladi Williams. Remain the team here at Channels HQ. This is bye for now.